Okay, even though I have numerous videos on my site about trading plans and triggers, I keep on getting questions about what the heck is a trigger and what the heck do I do with your work. So I'm going to go over a few examples that should be helpful to you. Now I'm going to start with a chart of Google and a setup that we had on the chart of Google, and then walk through what a trigger looks like. So in this case, we had the timing factors that came in right after the Christmas holiday. We had some key price support, including an extension of a prior low to high swing, and many moves tend to terminate at extensions of prior swings. And then there was also a projection of another swing. So you had the timing factors come in at the same time that we were testing some key price support. All right, so what do you do? Now, some people will just say, well, this support seems to be holding. I'm going to buy it and I'm going to place my stop underneath the low. But what I suggest for anybody that's new in this business is that you use a trigger, which is essentially the price action that tells you that it's worth placing a bet against one of the zones. This next slide, actually, we don't really need to go over it, but again, it's just what I do with the timing work, and it shows the standout on the dynamic trader histogram that was suggesting a possible low right around the Christmas holiday. Okay, so that's just the timing there. But what's next is the trigger. So for a day trade, if you wanted to use that support and timing for a day trade, you could easily, use a 2-minute or a 5-minute chart, or some people will even use tick charts. But for swing trades, I typically tell my traders to wait for at least a 15-minute signal or a 30-minute signal. Now, the 15-minute is the more aggressive swing trade entry, and I've posted these plans on Twitter before. If you can't find them, you'll have to let me know. But here, this is an example of the trigger. So this is where we had the support and timing, because here's where the low was made on the 24th. And what happened? Well, what I want to see for the trigger is the 834 EMA crossover to the upside. And that's what you're getting right over here. Now, besides seeing that EMA crossover, I also want to see a shift in pattern. So in this case, where you had a pattern of lower lows and lower highs into the zone, I wanted to see that shift also. So what it needs to do, to shift is to take out this prior swing high. So once both of those things occur, you have the moving average crossover to the upside for a buy, and you also take out a prior swing high. That's your entry signal, and that's when you can look at your option strategies that you want to use against this work. And then your initial stop can be placed either underneath the low or underneath the zone that's on the daily chart. Okay, either way, it just depends on how you want to write up your trading plan. But that's your initial entry, and as you can see, we definitely had some follow through to the upside, so there was money to be made in this case. When you're wrong, if it stops out or if it goes below the initial low or below the cluster, just get out, okay? Because not all these setups are going to work. Anybody tells you that, all their setups are going to work, they're full of crap. Anyway, so let's look at another example. So that was Google with an aggressive swing trade trigger. Now, here is a setup in Goldman Sachs. Now, this is where you had a larger bearish pattern of lower lows and lower highs. And one of the things that I did was compare some of these prior rally swings, like 24.95 and 26.19, from the low at this time to look for possible resistance. So this swing was very similar at 25.66. You also had other key price relationships and a cluster or a sell zone that came in at anywhere from 233.35 to 235.45. Okay, so that area was tested and it held. And then what happened? Let's take a look at the trigger on this one, because obviously we did roll over and die. So let's see what it looks like. So let's say in this case, in Goldman Sachs, you're going to say, well, I really don't want to risk getting stopped out. So I'm going to use the not so aggressive swing trade entry, which would be the 30-minute EMA crossover. So, here's the crossover. And then you also want to look to the left and make sure that it took out a prior swing low, because in this case, we're looking for a short. So it did both of those things. And as soon as both of those things occurred, you could short Goldman and place a stop either above this high or above the high end of the zone. Okay, so it slammed into that cluster. You go down to the lower time frame chart, because the lower time frame trigger chart is going to get you involved closer to where your definition of risk is. Then let's see, I've got one more example, and this was a trade that we actually had in the trading room, and it just made a great example. But we had some key support in Amazon just via a 10-minute chart. And this was, a cluster, because it had at least three, actually I think it had 4 price relationships at this area. It tested the zone and it held. Now this is a 10-minute chart. So with a 10-minute chart, and we do some of this stuff in the, in the trading room. If you want to look at this for a day trade entry, what are you going to use for a trigger? Well, you need to test the triggers on your own, but I'm thinking that a 2-minute chart trigger works just fine, because this is the way it looks for a day trade trigger that's going to get you in really close to where your risk definition is. So here's where we were testing the support. Here's 834 EMA crossover to the upside, and here's the prior swing high. So once it took out both, the prior swing high and it had the moving average crossover, you're okay to go long Amazon and place a stop underneath here. Now the risk to the potential reward, the risk was just to under here. The potential reward, this was target number 1 up at 14.95. So the risk reward is usually pretty good on these setups, and if it's not, you probably don't want to mess with them. But bottom line, we ended up having a huge rally from this low, as you can see, because the low was made, looks like the 1390 area, and it got up to, this was a huge rally off of literally a 10-minute chart setup. Okay. Anyway, so those are some examples of triggers. You're going to use the 15-minute or the 30-minute chart for swing trade entry, but you're going to use, maybe a 2-minute chart or 1-minute chart. Some people use a 5-minute chart. You really want to test it for yourself, depending on, the stock that you're looking at. But as far as my futures trade setups that are in the room during the day, typically you're going to use something like a 233 tick chart, because, that's going to get you in a lot faster and with a lot less risk. Okay, so I hope that helps, and I'll see you around.